Hello, my name is Jerry Sluzewitz. I'm the host of these Money Talks video casts. Today is Wednesday, February 8th, 2012. Markets continue their drive higher. This has been the best start of the year in some time, and it's a broad market rally. The U.S. market is the best since 1997. The global markets experienced their best January since 1994, best in 18 years. A lot of people are wondering what's driving this market. One thing is momentum, because once things start rolling, they keep rolling. The Dow Jones Industrial Average yesterday closed at its highest level since May 2008. That's before the big Lehman debacle, before the fall of 2008 and beginning of 2009 when the markets really took a tumble. So we've gained back all of that and again surpassed last year's high level. The NASDAQ not only took out last year's high level and the 2008 level, 2007 level, we are back on the NASDAQ to levels not seen since December 2008. I'm sorry, December 2000. Got to get that right. 12 years. We're at levels we haven't seen in 12 years on the NASDAQ. So again, what's driving that? What's driving that is consumer confidence, and that's being driven by the Feds, not only the Federal Reserve Bank of the United States, but also the global central banks around the world. What's happening is they are printing so much money and flooding the system with money that people feel confident, consumers in particular, and they have started to spend again. The consumer the report just came out yesterday, another increase, 14 in the last 15 months in consumer spending, both revolving and non-revolving debt increased. Part of the non-revolving is auto sales is increasing, which is good. The second largest purchase that most people make is their car. And then also the revolving credit is consumer credit cards up 10% over the last month in terms of usage, and a record high for the last 10 years in terms of consumer debt. So generally consumers are out looking, they'll spend more if they're confident about looking forward and saying, hey, we're confident things are going to work out. Now, why this confidence? The confidence is that both Europe and the United States are trying to resolve their problems by printing more money to keep the debt purchases for these sovereigns alive. Now, the Germans have told the ECB, the European Central Bank, that they cannot buy sovereign debt. Well, through this LTRO, long-term repurchase operation that was done back in December, announced, the banks in Europe are borrowing money at 1% from the ECB and buying sovereign debt and using that as collateral. So it's not a direct purchase by the ECB, it's being done by the banks. Now they're buying this debt with a 7 to 8% interest rate, and they're borrowing at 1%, so they're being recapitalized, making money on the spread. There's a buyer of last resort of the bonds of the sovereigns, so everybody's a winner in that. Now, is that a solution? No, it's gonna kick the can down the road as they hope for growth, at some point down the road. How long will this work? It'll work till it doesn't. I mean, it could be a few months, it could be a few years, it could be longer, it could be shorter. However, the biggest problem, the biggest overhang is Greece. People are very concerned about what's going on there. Well, what's going on over in Greece is they're forcing, voluntary, a cut for the bondholders of the Greek debt. So about $100 billion, I believe, of their $200 billion debt is going to be refinanced. What used to be 6 to 8% interest rates at an 8 to 10 year term is now going to be refinanced at a 3.5 to 4% interest rate with a term of 30 years. Big extension on there. And instead of getting back 100 cents on the dollar, the lenders to Greece are only going to get back anywhere between 30 and 40 cents on the dollar. So it's a new way of looking at life, but kind of like General Motors when they went bankrupt, where the common stockholders, the UAW, got part of the new company, and the bondholders, who are senior to common stock, got nothing. We're going to have to rewrite all the books, Harvard, Yale, all the business books out there, and say, in the end, all this is true except for if the government deems it this way. So the government is now forcing a refinancing of debt on bondholders. That will set the model for Ireland, Portugal, Spain, and possibly Italy, and any other country in the future that gets in trouble, is they're saying, well, here's the template we're going to use, and that's why it's important. But it does look like that's going to get resolved No one's real happy about it. Austerity is still out there. It doesn't mean the coast is clear, but it does mean that the coast is better. Equities are rallying, and again, it's a good time to be in the market. Now, if you're an investor out there that is not sure what to do or doesn't have the right exposure, the 3 Ps, doesn't have a plan for participation and protection, in particular that protection, give me a call, 800-449-9501, or on the web at www.yourmoneytalks.com. My name is Jerry Slusowitz. We update these things frequently. We have other stuff, podcasts, as well as written material on our web, yourmoneytalks.com. And give me a call for that free no obligation review, no matter where you are. Have a great time investing.